Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 1st of March 2024. First chart is the US Dollar Index Futures, as usual. And I'll put in the axis line. That's been the most important line for a while now, around the 104 level. And price has sort of stalled out here. Price moved up to this level 5 weeks ago. And since then, price has really stalled, and normally you would give the market 2 to 3 bars to push through a level and move higher if the market's been looking strong. But this market's really stalled out. You'd have to increase the chance now that price will eventually break down here and move lower. It's had a good chance to move higher, and it's proven difficult to do so. It looked like it was going to go higher here on this bar, but eventually closed back at this level. It's then tested for supply and even tested below the previous bar's lows, but closed back up near its high again. And this week, it hasn't been able to go higher again. I guess you could make the case that this was a shakeout and a test, and you're going to get a breakout in response. And price could still move higher, there's no doubt. But you have to increase the chance that the market will fail here because it's taken so long. At some point, you can't remain optimistic forever and expect the market to continue higher. So the probabilities have increased of a failure here. It's not to say that it will, but they've increased for sure. Next chart is the E-mini S&P. This is S&P 500 index futures. And just put some lines in quickly. And this week, price tested for supply early by the looks, and then popped up to close as an up bar for the week. This market's been really positive for quite some time, all this year since November last year when price started pushing higher. You've only had 2 down weeks since November last year. Spread was narrow this week. It looked like there was some uncertainty and a period of testing for supply. It may have had something to do with the US dollar and how it was trading. But eventually prices popped up on the late weakness in the US dollar and closed as a slight up bar for the week. Volume was below average, so it doesn't look like any great amount of supply was being drawn out. So you shouldn't be too concerned about any serious down bar at the moment. If that was to occur, it would be an unexpected event. There's no planning for the downside at the moment. This was price just floating up on a lack of selling pressure. US Treasury 10-year note futures. And we had the highs of the range up here and the lows of the range coming through here, pretty much adjacent to this 110 level. And this week, prices initially tested for supply, but volume suggests that, because volume is very high, that supply was drawn out. And that would now suggest that absorption has taken place down here, and prices then popped higher in response. So this was quite a strong setup. The close was at this level by the looks, which is a minor level, a sub-level, you might say, in between the 2 levels. And prices closed there. I would expect this market may test this level at some point, although early on you may get a little test for supply early, and then the market pop up to test the strength of this level in the end. Copper price futures. Copper price futures, we'll put the lines in first. Here's the lows of the range. There was some accumulation that took place down here. The next level comes through here, like this. And then the higher level up here. We had a 2-bar reversal on these 2 bars here. And we noted at the time that this was probably buying support that came in. That was pretty much confirmed with the next bar also being up in response, although spread was very narrow on above average volume. So the market probably needed to consolidate and test for supply. And that's exactly what it did this week. Price came back, it's dipped lower within the range of these two bars. I sort of think of these two bars as one bar, if you like. This was the push lower here, and this is the one bar in response. Some supplies being drawn out near the highs. The market needed to consolidate. It's pulled back. Volume was below average after 5 weeks of above average volume. When price pulled back, volume was lower than average. That suggests that selling pressure is low and the market may attempt to push up again in response, probably up to test the highs of the range. There's been supply drawn out at this level consistently for some time now. When price broke down here, since then, the market has found selling pressure every time the market has tested this level. So there's been a lot of work going on down here now. And if price does push up, and there's some chance that it will in the future, I'm expecting that some of that previous supply has been absorbed now, and this may allow the market to push up into this level with a bit more ease. But that remains to be seen. Gold price futures. Gold price futures have had relative strength for some time. I've been suggesting it for a little while. This was a 3-bar reversal in the background. This was price confirming the buying down here, going through a period of consolidation, testing the highs of the 3-bar reversal or shakeout. Here was the confirmation on the push higher again. We're kind of ignoring this bar. There's been no response to the downside to it, and that discounts the fact that it was a serious weakness at all. I've got a video on it if you want to have a look, but we're discounting this bar, and the lows of the range are coming through here now, and we've seen the market really compressing the ranges, and we've noted that there's been good, strong buying support here. That was on this volume, above average volume. This was the confirmation where supply was drawn out from the left here, which made it close off its high. But that was the confirmation of the buying here. Test for supply was found to have low volume. Selling pressure was low. A little shakeout below all the previous lows across here. Picked up anyone's stops who were letting them dangle too close. An up bar in response to show the support that came in on this little shakeout. And now we've had an attempt to break out. And it looks like a pretty good attempt to break out. And volume increased to about average. So this was genuine trading. It wasn't high volume, it wasn't excessive volume, and it didn't float up because selling pressure was just low and it floated up and it's really insignificant push higher. This was a genuine push higher. Volume was about average, and that will tell you that the trading was genuine. You can trust it generally. If it was excessive, then you can be concerned that there might have been some hidden trading inside it. And if it's low, then it may not be as significant as you expect. But something right on or around the average is genuine trading, and it can usually be trusted. So this is a genuine attempt to break out. Doesn't mean that it will break out, but it's a genuine attempt to do so. And it looks pretty good. At this point in time, there's probably a 50% chance the market will test the breakout for strength. Now, you could make a case that the horizontal breakout line is there. So you may just see the market do this in response. And that would be a pretty strong way of looking at it. I don't think the market is really going to push all the way back down to here to test the strength of the breakout. I think it would be more likely to be this line in here. So you may just get a little test for supply in response next week, like this, at least early on. And then if no supply is drawn out, if volume is low, then an attempt to push higher again, especially if there's weakness in the US dollar. That'll play some part in it as well, for sure. So keep your eye on that market. But this looks good. This looks like a good, strong, genuine attempt to break out. We'll see what comes of it. Silver price futures have been a little bit messy. I've been saying it for a few weeks now. Levels aren't always respected as you would hope that they would be. That was the old lows of the range there. I think that's been fine-tuned to that level there. These longer-term levels are fine-tuned over time, and I think you'll find the lows of the range are really in there at the moment, and this is more like a last gasp level. 3 weeks ago, the market pushed high with a wide spread. At that time, the gold price futures were testing for supply and doing that little mini shakeout thing. So this was trading that didn't match up with the gold price, and they usually do match pretty well. I can't explain exactly what happened. Volume was very high, but it was inverse to what the gold was doing. So it did need to test for supply and response, and that's what happened last week, although volume remained a little bit higher than is ideal. So there was a deeper test this week, at least early on, and you've had volume still pretty high. There's a lot of activity in this market, and the fact that prices had to dip a lot lower to consolidate than you might expect, considering the range of this bar, before price found support and closed higher, suggests this market isn't quite as strong as it initially appeared, as strong as this bar suggested. So we'll see what happens. There might be a little bit of catch up to do now compared to gold. If gold is attempting to break out, this market will follow it to a reasonable extent, and we'll just see. But I expect there's been a pretty good attempt to consolidate. Volumes are lower despite being above average. I think if gold continues higher next week, this market will attempt to push higher. It's got some catch up to do. Light crude price futures had been trading pretty inconsistently previously, but they're looking a little bit better more recently. This was a bit of a weird dip lower, way below the lows of this range that I mark in here. But things happen in this market sometimes that don't always make perfect sense. But the response was a complete recovery back above this level the next week, and then price pushed higher in response, albeit on increased volume, which suggests that some supply was being drawn out, and the market pulled back in response, but only drew out below average volume, and trading remained within the range of the previous bar pretty comfortably. And then this week, the market has tested below the previous bar's low. It's rejected going lower, and it's recovered all the lost ground to close as an up bar this week. That's actually pretty strong. That looks pretty good. If you were to put in some oblique lines like that, you can make the case that price is grinding higher with a pressing nature towards the upside. And that suggests there's some positivity in this market. It's looking all right, looking much more consistent than it has done previously. I say that with my fingers crossed, because this market has been inconsistent more recently. But at this point in time, it's looking okay. This is the Euro US dollar currency futures. You've got the lows of the range come through here, the next higher level through there. You can see that price tested the lows down here and recovered, pushed up but drew out some supply at this level. This week price is traded as an inside bar, almost the exact inverse of the US dollar index futures, almost the exact inverse, almost perfectly. Volume was a little below average, so there was no serious intent being shown, I would suggest that shows that this market just traded the inverse of the US dollar, and the fundamentals from the actual Eurozone played little part in price movements, at least this week. This was just trading the inverse of the US dollar on below average volume. And whatever the US dollar does, this will do the inverse, at least in the near term. British pound currency futures, you've got the lows of the range down here and the highs of the overall range through there. And price traded as an inside bar this week, traded as a down bar, which suggests a little bit of weakness has emerged. The US dollar traded as a down bar, so this should have traded as a slight up bar you would have expected. And it's kind of traded the inverse of the US dollar, but it's closed as a slight down bar on, well, slightly below average volume. So this is probably similar to the euro. Not a great deal of influence from the British side, and mostly the inverse of the US dollar, although the slight down bar close for the week suggests that the British market is slightly weak, and that's why it closes as a down bar and not as a slight up bar. Aussie dollar currency futures, we've got the lows of the range come through there, the next higher level through there, and this market is looking a bit weak. Although the price recovered a little off the lows, it really should have traded as an up bar this week if it was trading the inverse of the US dollar, but it traded as a down bar, and it really only closed pretty much adjacent to the previous bar's low. This is a bit of weakness in this market. It's possibly unlikely this market is going to go higher, at least in the very near term. There'll be some resistance at this level. So just above the 66 is probably as high as it's going to go, even if there's some weakness in the US dollar in the near term. And you may find that price spends more time down at these levels adjacent to where the market found support previously. So in here around the 64 to 66 and a bit is where the market's going to trade for sure. If the US dollar is strong, it's down around the 64. If the US dollar is weak, it's probably around the 66, but not much higher. I see this market as being a little bit weaker, or a little bit on the weak side, at least in the near term. Bitcoin futures have been trading really nicely, really. We saw potential supply from the left here. The market spent time absorbing supply as it entered this zone. It gapped up, spent some time in consolidation mode, drew out supply here on this high volume, came back to consolidate, spent a week in absorption mode here, and then price burst out of this zone and up. 1 week's consolidation, and it's really accelerated higher this week on good volume, but not really excessive volume. It's above average. It's a bit higher than you might like, but it's not really excessive. In the past, I've actually done a video on this sort of thing in the Bitcoin market. The video was called, "Is this a buying climax?" The bar itself, and this bar as well, looks a bit like a buying climax. The volume suggests that possibly isn't, was modestly above average, not a lot above average. You can see that this bar here, this bar here, this bar here are all higher than this week's volume. So it's probably not a buying climax. I'll go back and there you go. It was that bar. I made a video saying, is that a buying climax? And it proved not to be. If we go forward, you'll see. The market spent some time in consolidation mode. So it spent a month consolidating in response to that really strong up bar. then it pushed higher, then it consolidated again. Now this time, price really wasn't able to make substantial gains in response. You can see that here was the bar I initially suggested that this was a buying climax. Price just consolidated over a month and then pushed higher. Here was the next higher push. And look how much the thrust has shortened on this next push up to here. Price made all of this ground from the previous push higher, then all of this ground, slightly less, but it was still quite adequate. But the next push higher only had this much ground made. This is shortening of the thrust. This is the buyers becoming weak, a bit of selling pressures coming in, and the market may be starting to unload. Doesn't say it's all over, but it generally means there'll be a pullback in response. So the market tried to go again here, and it failed, and price pulled back, although it did hold on. Then you had a weak attempt to recover. They couldn't make new highs, and prices pushed lower with a increased spread, and it still closed off the previous down bars low, but you can see here the thrust higher has definitely shortened, and price failed here, gapped down, recovered, but it was a weak recovery. The buyers were exhausted, and price has come back, and then in response, price really started to slice lower. And now we're here. So we will almost certainly get consolidation in response here. If momentum is seriously strong, there might be an attempt to push higher, but I don't think it will be broadly supported. We'll see. But generally, when you get a widespread up bar on above average volume, you'll get some attempt to consolidate in response. You saw the last time it happened, it took a month in consolidation before price pushed higher again. We'll see. There may be, this momentum could be really strong, and you may see some attempt to continue higher, but I can't see that spreads will continue to be that wide as price pushes higher. If that's the case, you're going to get a reduced thrust higher in a similar fashion to what you saw last time. The most sustainable response would be a period of consolidation here, preferably within the top half of this bar, so preferably above, say, that level. That would be underlying strength being shown. And then after price consolidates nicely, you might get a push higher there in response. So see what we get. You don't really want to continue higher in a weak way. You either want to see expanding price to the upside on expanding volumes, which then does make you look a little bit vulnerable to a buying climax, or you want to see a period of consolidation here in the top half of this bar to show the real underlying strength of the market. Back to the US dollar just quickly. You can clearly see when I put it in, this axis line has been causing the problems. It's really only a minor level on the chart, but it's a longer term line, and that's what's causing the issues. If you only drew the line from this bar across there, it really wouldn't be too much at all, just a little short-term level. But this is actually an axis line that goes all the way back here, and the market respects this line all the way through. And it pushed up to it 5 weeks ago, and it's been 4 weeks of work, and it hasn't been able to bust higher, which is surprising, to be honest. I thought it would. Thought it was going to go here. So we're at a really important juncture now. You really want to see the market really thrust higher and prove that it is strong. Otherwise, the chances of a breakdown here will increase. So we've got one thing or another going on. It's either going to prove its strength or it's going to look weaker and weaker. It may only ease lower. It doesn't have to go lower with a great big single bar. It may just ease lower reluctantly, if you like, because it doesn't have the strength to move higher. But the probability of a failure here is definitely increasing. It's not guaranteed, but it's definitely increasing. So you need to put that into your calculations and just consider that a failure is some chance here. Okay, that's my lot for the week. I may not be doing this next week. There's some chance we're having a big family reunion. It's not confirmed yet, but there is some talk of it. If that's the case, you won't see me next week. Okay. Thank you very much for your time. See ya.